It's time for Futures in Focus. Now, oil is falling along with stocks, and we have a little bounce in soybeans. So let's get straight to the CME and our guest, Ted Seifried of Zaner Hedge. Ted, soybeans are interesting to me today, given that every other asset class seems to be dropping partially on China fears, and yet we have soybeans rallying just a little bit. What's behind that?
Yeah, absolutely. Great question, Bonnie. I mean, for one, we did have an export sale here this morning to unknown destinations, which may or may not be China. So the soybean market does like that. We also had Kudlow saying that Trump thinks that China would like to see a deal sooner than later, and he would too. So we are trading the trade headlines in soybeans on a daily basis. And it really means a big thing for soybeans, because soybeans right now are looking at the largest carryover we've seen in soybean stocks ever, almost by double what the previous record was. So we have too many soybeans in the lack of in a climate where we're not doing a lot of trade with China. So whether we get a deal with China or not, soybeans are very, very sensitive to that. Now, in the great scheme of things, we're going to have too many soybeans anyways. So, you know, if we get a deal done, we might get a knee-jerk reaction higher, but at some point, soybean prices are probably going to have to trade lower again in order to cut out some acreage for next year. So it's going to be a very volatile, I think, holiday season for soybeans, hanging on every word that we hear from Trump tweets or various officials speaking about trade potential with China.
So then what's going on with oil today? WTI, the contract is having a barrel trading at 54.33. It's down 5% in the session, Ted. What are traders at the CME saying?
Yeah, so crude oil down this morning, I think very much so in sympathy with stocks. Inventories are expected to rise 2 million bushels. That would be the 9th weekly build in a row. Russian oil minister says they need to watch the market before making a decision, so that's a little bit negative. However, Saudi would really like OPEC to cut output by 1.4 million barrels a day, probably in early 2019. Russia has suggested they would enter into a partnership deal with OPEC. I think Russia would like to reduce their oil output due to the rising domestic food and energy costs. It would also help them recapture some of their buying power of the Russian ruble. So I think it is in their best interest. I think eventually they would want to come along with that. And we're at the first level of consolidation in crude oil after about a $20 break. We did tag new lows here this morning, but those new lows are very strong weekly chart support at that 53.70 level. That is a multi-week support level. This could be an area where we could start to see a bit of a bounce from, and my target on a bounce would be 66.50 to 67.05.
Right, so what exactly is looking attractive this morning, Ted? Where are you seeing bargains, or are you staying out of it all?
I'm sorry, Bonnie, can you say that again?
What's looking attractive to buy down there today?
What's causing us to want to buy crude oil?
No, I'm saying what opportunities are you seeing generally at the CME today for what buying opportunities?
Yeah, so, you know, again, I'm really going to key in on crude oil here because I think that we've gone a little bit too far to the downside. That weekly chart support is really encouraging for me. I really like seeing that. You know, we've respected the upward trend in crude very well over a long period of time, and I think we've just overextended to the downside. So I really like crude in here. I'm watching how it trades here today. We've had a nice reversal off the lows here so far. We're still down on the day by a fair amount. I am worried about more pressure in the stocks, but longer term, I think crude oil is a very good buy down here.